Welcome back to Real Estate 101. Today we're going to talk a little bit about mortgage default insurance, and I'm pleased to be joined by Tracey Brock of Dominion Lending Centers. Tracey, welcome back to the show.
Thank you, Joe.
All right, Tracey, so what is mortgage default insurance?
Mortgage default insurance basically protects the lender should the borrower default. It's issued by one government body, Canadian Mortgage and Housing Corporation, or CMHC, and then two private companies, Genworth and Canada Guarantees. And it basically is to protect from any type of default for the lender.
All right, and how is it different from home insurance?
Well, home insurance protects you, the borrower, from fire, theft, damage. Default insurance protects the lender should you miss your mortgage payments and your home goes power of sale. The insurer will then cover the cost of that home, any extra costs on that home that come from the selling of that home.
Okay, so what are the basics as to how default insurance works?
Well, how it works basically is that when a borrower has less than 20% to put down towards their new home, and in some cases 35%, the lender will, after reviewing the application, will submit the application to one of the three insurers. From there, based on the amount of the down payment, there's a premium that's prorated and they add it to the mortgage.
Okay, so the premium is added to the mortgage, or is it paid one time? Does it have to be paid before the mortgage closes?
Typically, people are going to add it to their mortgage and then it's amortized over the life of the mortgage. You can pay the premium up front if you wish, but if you're going to do that, typically people would put more money down towards their down payment opposed to paying the premium. So they just cap it on the mortgage and it's paid over time.
All right, Tracey, so are there any circumstances where the premium may be lower for some people and higher for others?
Absolutely. So somebody who is business herself using a stated income program is going to pay much higher premium than somebody who is salaried or an hourly employee, where they can prove their income based on their line 150 and their notice of assessments. As well, when people are buying homes from one purchase to another purchase, not everybody always has 20% from home to home. They have a top-up premium as well. So sometimes it's beneficial to find out where that top-up premium is at, and if it's significant enough that you can save some money using the top-up premium, then there's another way of where the premium can be a little bit different.
All right, so there are some rumors out there that changes may be on the horizon when it comes to CMHC. Do you know anything about it?
Definitely. The CMHC has decided that they're going to increase their premiums as of May 1st, and Genworth and Canada Guarantee has followed suit. So this will affect everybody who is buying a home with less than 20% down.
All right, so what does this mean for borrowers?
Typically, for the average consumer buying a home with 5% down payment, it's going to be an increase between $900 to $1,100 or $5 per month extra on their mortgage payments.
Now, is mortgage default insurance optional? Can someone opt not to take it if they have under 20% down payment?
Absolutely not. It's mandatory by the federal government. It's one of the reasons why we don't have the problems that they had in the States with the US, where a lot of the banks had to declare bankruptcy when the home values became lesser than what the owner's home mortgages were. And the people just started walking away from the houses, and there was no,
lenders weren't protected.
They weren't protected. So this is a mandatory premium that's added to the mortgages, and it protects the banks should you default.
All right, Tracey, so any last thoughts on mortgage default insurance?
Absolutely. You know, change is inevitable. Life always gets more expensive. It doesn't mean that it's not affordable still to buy your first home, and I encourage people to still go out there. It's good, still 5% down payment is available to you. Speak to a professional mortgage broker, speak to a financial planner. Somebody is going to give you the right advice to make sure that your budget's in place to go forward. Buying a home is your biggest investment, and it's definitely worth the effort.
All right, Tracey, great stuff. Thanks for coming on today's show, and we'll see you again next month.
Thank you very much for having me.
So there you have it. If you need more information on mortgage default insurance or need the help of a top mortgage broker, get in contact with Tracey Brock of Dominion Lending Centers. I'm Joe. Thanks for watching, and we'll see you next time.